All right, tech lovers, buckle up because Synopsys, the big kahuna in electronic design automation, is making waves with not one, not two, but a trifecta of intriguing developments. First up, let's dive into the market dynamics. Synopsys' stock was on a bit of a roller coaster today when shares spiked by 5.5% thanks to some promising news regarding their massive $35 billion acquisition of Ansys. This move showcases Synopsys' strategy to dominate the sector by joining forces with the simulation and analysis giant Ansys. The Federal Trade Commission has given a thumbs up to the deal, albeit conditionally, narrowing the path for what could be a game-changing merger. Once China approves, this acquisition could lock together a powerhouse pair set to redefine semiconductor and simulation technologies. On the other side of today's financial theater, Synopsys reported their Q2 2025 earnings, and guess what, friends? They exceeded expectations. Their non-GAAP earnings climbed a cool 22.3% year-over-year, raking in $3.67 per share against an anticipated $3.39. Revenue jumped up by 10.3%, reaching an impressive $1.604 billion, largely supported by their time-based and upfront product segments. It seems like Synopsys is revving up its engines on all cylinders, driving profits and proving to be a robust player in the tech arena. But don't pop the champagne just yet. There's some tension in the background. Synopsys, along with its peers in the EDA world, is under the scrutiny of new U.S. export curbs targeting technology moving to China. The government's move aims to put a crimp on China's access to software, including the kind Synopsys produces. Despite the looming regulatory storm clouds, the Synopsys team led by CEO Sassine Ghazi remains confident. They've yet to receive official word on these restrictions, and their upbeat forecast suggests they're ready to adapt and thrive. And just as we pivot to a fiscal note, Synopsys announced an adjustment to their fiscal year setup which aims for a more streamlined accounting. This shift means jigging the fiscal year-end date, promising a neat and tidy calendar alignment. Overall, the mood music surrounding Synopsys is upbeat, with investors observing a strategic focus on artificial intelligence, software-defined systems, and all things silicon. Their message is clear. Amid micro and macroeconomic challenges, such as the tech skirmishes with China and global market volatility, Synopsys holds a steady course toward innovation and profitability. So there you have it. Synopsys is flexing its corporate muscles with strategic growth, surpassing earnings expectations, and navigating international regulatory waters like a savvy sailor. Let's stay tuned for how these currents will shape up for Synopsys in the coming months. Thanks for watching to the end. Remember, this is just one story from our full daily show, which includes all the other news and an analysis of the day's tech market activity. If you found this video interesting or insightful, then please like, subscribe, and share it with others. Your support is greatly appreciated. Catch you later.